for dissecting the geopolitical landscape and trying to understand it. Joining us now is Ken Courtis, former chair of Goldman Sachs Asia, currently chairman at Starfort Investment Holdings, and also a member of Finance Minister Bill Morneau's Economic Advisory Council. Ken, always great to be able to speak with you and get your views. Thank you.
Great to be with you, Catherine.
Ken, it's, I started by saying dissecting. I almost think that that's what you have to do in this scenario because there's so many moving pieces and parts. Why don't we first start with your takeaway from the NATO meetings and NATO summit and what we really need to understand about the relationships going on right now? What's your take?
Yeah, I think there are two big headline issues that came out of that. Number one, the provocative statement of Trump that Germany was a hostage to Russia. And number two, that everyone's going to increase their defense spending to 4% of GDP. Let's just quickly look at both of those. I don't think anyone's agreed to take defense spending to 4% of GDP, not even the United States. But what Trump is really pushing behind that statement is markets for U.S. arms producers into NATO. Because if everyone increases their defense spending by 1 or 1.5% of GDP, that's a huge bonanza, especially for the big U.S. arms producers, and you've seen today in the stock market that they've been very strong. Number two, Germany's a hostage of Russia because Germany gets gas like a number of other European countries do, natural gas from Russia. Actually, Western Europe has been taking gas from the former Soviet Union since 1972. And during the period of the Soviet Union, the gas was delivered every moment, on time, on budget, never a problem. It's only since the breakup of the Soviet Union that we've had a problem largely with the Ukrainians taking Western Europe hostage by blocking the Russian gas, which passes through pipelines in the Ukraine, not paying the Russians, so the Russians cut the gas off. That's been the source of the problems for 7 times that the gas has been cut over the last 25 years. So the Germans and the Austrians and others in Europe have financed what's called Nord Stream 1, which takes some of that gas then directly from Russia through a pipeline under the North Sea to Germany, to Austria and elsewhere, and so going around Ukraine. And that's what Nord Stream 2 would do. It would complete the line, and therefore Europe would no longer be hostage of the shenanigans that the Ukrainians play. But what behind that on the U.S. side is going on. The U.S. doesn't want this pipeline to be completed because they now are afraid that the Chinese are going to start diverting their gas purchases, which the U.S. had been dreaming about, to other sellers because of these trade tensions that Trump has created. And so the American gas producers are desperately now thinking of what could be a substitute market. And if they could dislodge the Russians from Western Europe, then they could export a lot of American gas to Western Europe. So they're the two takeaways that I have from the meeting in Brussels.
So President Trump, while putting trade pressure on all of these various parties, is technically negatively impacting the U.S. natural gas producers, and they're trying to get around it somehow through Russia. Is that going to work? Yeah, the U.S. should have a fairly competitive price on gas exported into Europe, but there's a lot of new competition. Cyprus is going to have a lot of gas. Egypt is going to have a lot of gas to export. There's a new pipeline coming through from the Caspian. The Turkish line from Russia will be completed the first quarter next year. So it's not going to be that easy, and the Russians are going to obviously hold tenaciously to their market share in Europe. So we'll see where this goes, but the Chinese are now looking to source gas elsewhere from the United States, and that I think is a real problem because the big gasification plants being built on the Gulf Coast were all built and are being built on the assumption that they would have huge access to the Chinese market.
So then, Ken, clearly the Chinese know that this is something that they have to hold up against Trump right now. So when we look at the market today, the equity markets are rebounding a little bit. There's hope, there's talks that that the conversations, the bilateral negotiations between China and the United States will continue. Will this be one of those bargaining chips that we're not talking about enough that China has over the United States, and therefore the markets, global growth can still be off to the races? Or, you spent most of your career in Asia. You know them well. Are they going to at some point say enough is enough, and they truly will focus so much more on natural gas from the Europeans?
My sense is that the Chinese don't roll over easily. In their culture, if you punch, someone punches you, you punch back, and then maybe you sit down later and talk about it. So I think we're still in the opening rounds of this. The Chinese will not roll over easily. And their view is that they can outweight the Americans. When eventually the Americans and the Chinese come to a deal on China buying much more from the United States, that will inevitably turn around natural resources. So the U.S. will be wanting to export more oil, more natural gas, and more agricultural products to China. So this whole energy equation is a big part, or will be a big part of these negotiations. Furthermore, building these huge $4, $5, $6 billion regasification and gasification plants on the Gulf Coast, they employ huge amounts of people for 4 or 5 years while they're being built. And that, of course, is again something that Trump wants to be able to say that he's created jobs, he's created industrial jobs. And so I think that will be very much part of the negotiations when we get there between the U.S. and China on these trade issues.
Ken, do you believe in all of your conversations that President, and I think this is really important to understand where we're going in the economy and where we're going in the markets, do you believe that President Trump understands all of the interconnectedness between the markets and the geopolitics and the economy, and therefore he knows when to back off and when to push, and he knows how to do it precisely? One of the reasons why I'm asking this is because an astonishing number to me is the soybeans. 30 million tons of soybeans are imported by China from the United States. The next biggest market for the United States is Mexico at 3 million tons. We might not see all the impacts yet in the economy, but clearly it will be affecting some of his key base. Does he understand this?
Catherine, there are always unintended consequences. For example, we've seen in the last few days that BMW, which has built a huge factory in the southern U.S. To make SUVs, and they had been expecting to export a very large number of the SUVs coming out of that factory to China. Of the top 10 car exporters from the U.S. to China, 6 are Europeans, and they represent about 3/4 of the cars that are exported from the U.S. to China. So Daimler, Volkswagen, BMW, they are all now thinking that they have to reduce their activities in the U.S. for exporting cars to China, but rebuilding bigger operations in China to supply the local market so they don't get caught up in these trade conflicts. So there are all these unintended consequences, and to assume that Trump understands them all in detail, their intricate patterns and the timing, I think that would be very heroic. Okay. I think Trump has some really simple ideas that he's working on, but he's not really into the detail, I think.
So where does that leave you and your team as it relates to investing in this environment? And I was thinking about this last night in terms of what kind of environment we're in. And it seems as though over the past 10 years, all of us had to watch every move any central banker made, or at least the major central bankers. And now we've moved from watching the central bankers to watching President Trump. This is the new era that we are in. Is that how you're thinking about it? Or who are you watching most closely to figure out which direction we're actually going to end up in?
Well, never take your eye off the central bankers. Never, ever. And so we'll just have to continue watching them very closely. With regard to U.S. policy, there are two aspects of U.S. policy, or two pillars, if you like, of U.S. policy that business likes, that the market likes.
One is the tax policy, and Trump is actually now talking about further tax cuts. And secondly, the deregulation efforts that the Trump administration is making. Trump boasts that they've cut more regulations than any government in history. Who knows? But those are two pillars of Trump's economic policies that business really likes, that the stock market really likes. What the stock market doesn't like, what investors don't like, what business doesn't like, is what's going on the trade front and what is going on the immigration front. You've seen today Microsoft announce that they may have to reduce activities in the US and expand more in China and India because they can't get visas for engineers to come to the US to work in their operations, and they can't hire enough or find engineers in the US for these jobs. So that's where we are at the moment. I think on trade, the US will eventually come to a point where they do a deal probably after the elections, because Trump will want to go into the election saying, I'm tough on trade. I told you I'd be tough on the Chinese, and you see I am. But I think subsequent to that, the noise that this is creating in the business community will lead him to come to some deal and then, declare a great victory, whatever that deal happens to be.
Where does that leave you, Ken, as it relates to investing right now? What are you interested in owning?
Well, let's start with commodities. Energy's in a correction at the moment. I think it comes down further. Does it come down to the mid-60s on WTI? Perhaps. But I'm still looking over the midterm to higher energy prices. So I'm waiting for the market to pull back to see if it gives us a new opportunity to enter the market. Other commodities, you mentioned soybeans, for example. Some of these markets are in fairly good balance, equilibrium in terms of demand and supply. So if China doesn't buy soybeans from the US, it's going to buy more soybeans from Brazil and Argentina. And so the US will have soybeans to sell to Brazilian and Argentine clients that won't have supply because the Chinese will be in there taking it off the market. The metal sector in commodities is in a correction at the moment after a big pop, because people aren't really sure where the economy is going to be in 2019, 2020 because of these trade issues and central bank monetary policy. More broadly in the market, I continue to say look for highly undervalued sectors where there's profit momentum. I still continue to like the banking sector, although it's been trying on people. But you remember 2 years ago, I was very interested in the energy sector,
yes.
and that worked out. And my sense is that these Trump taxes, because that's what this is, tariffs is an increase of taxes on anything you import, raises prices, cuts margins of companies, and I think the consequence of that is that you'll have companies investing even more in technology as they try to cut costs. So I think the technology sector will continue to offer opportunities.
Okay. Ken, just last question here. What do we need to know about the Putin-Trump summit?
I think short term, the issues on the summit are going to be some agreement on Syria, where really the Russians are now calling the shots, a discussion about North Korea, and longer term, I think the real objective of Trump is to see if he can somehow split the Russians and the Chinese, because if he could do that, then the Chinese it would be easier for him to negotiate with the Chinese than it is today. I think that's going to be futile. I think the sanctions have pushed Russia into a deep strategic relationship at many levels with the Chinese, energy, other economic sectors, strategy, military, political, and I think it'll take a lot of time to split the Russians off from the Chinese. So I think the real things are going to be short term, reestablishing the relationship between the two presidents, and the issues of Syria and North Korea.
Okay. Ken, actually, this is going to be my last question. Bottom line for investors, because I feel like you're a little bit more positive about the outlook, the global outlook today versus when we spoke maybe even a few weeks ago. Is that correct, or are you still a little bit cautious and want to make sure our viewers understand that message, hold some cash, be a little bit cautious here?
Catherine,
I want to watch very closely what the Fed decides in August and September. If they decide to hike rates and they do not tell us that they're going to slow down the contraction of the central bank balance sheet in the United States, that means that the financial pressures in the US that are already building become much stronger. And we're in a world where we're carrying debt levels like we've never seen before. So if they start to squeeze too much too fast, then markets are going to react in a negative way. So still be cautious, watch the Fed closely, and keep your eyes wide open.
Okay.